Once again, hello everyone. I hope you're having a great Tuesday because me and my colleague Max are going to discuss the UK CPI year-on-year data today. For you, as usual, we're going to cover, we're going to cover the fundamentals and technicals. The UK CPI chart, as you can see over here, and the forecast stands at 0.1 for the year-on-year, and the prior figure stood at minus 0.1% respectively. Talking a little bit about inflation also, because it will be out actually at the same time. Inflation was negative for a second consecutive month in October, as you already know, reaching minus 0.01. Clothing prices were the biggest contribution to inflation, but declining food prices offset the price rise. Subdued inflation suggested the Bank of England's Monetary Policy Committee will be in no hurry to push interest rates in the coming months. At this point, I believe it would be necessary to look at what do economists expect on the matter. And according to their views, we have the Bloomberg survey summary where the median estimate stands at 0.1%, average estimate stands at 0.08%. High estimate stands at 0.2%, and low estimate stands at 0. Whereas the number of estimates this time has reached 36. So a little bit more detailed about the UK economy. So we have the Office for National Statistics saying that largest downward contribution on the CPI came from petrol prices falling by 3.7 pence per liter between August and September this year, compared with a fall of just 0.8% pence per liter between the same 2 months a year ago. But petrol prices stabilized in October this year, falling only 2 pence per liter from September's average, which is exactly the same amount of price fall seen between September and October last year, according to the AA Fuel report. Given that the price of petrol has recently been among the largest movers recently, we may expect a neutral impact and the annual rate of CPI to either remain unchanged or to rise slightly up to 0 in October if all else stays equal. According to the British Retail Consortium, UK shop price deflation showed in October, but the deflationary forces are expected to remain all the way through the end of this year, and supermarkets and other high street retailers continue to wage price wars ahead of the festive season. Supermarkets will be working hard to get sales growing again, as intense price competition is having a deflationary impact on the overall shopping basket, the British Retail Consortium said. Core inflation, which excludes volatile prices of food, energy, alcohol, and tobacco, is expected to have remained at 1%, while CPI in the robust services sector has been floating firmly above 2% since early this year, and picked up to 2.5% in September. But we will not continue with the core one. And since I have only 1 minute left, let's have a look on the community members' vote. And as you can see, they are rather bullish this time, 53.64 versus 46.36% bearish votes. And we have a couple of comments. For example, Dukascopy says that definitely many fundamental events at the same time, and the CPI being the main one. After last 2 negative readings, he believes that only bigger increase than expected 0.01% could bring bullish impact for sterling, but he does not expect that any bearish impact on the that so bearish impact. I would say that. And that's pretty much it on the fundamental part. And to that time, Max joins the whiteboard to cover the technicals. Please.
Thank you very much, Polina. Hello, everyone. I hope you have a great Tuesday indeed so far. So speaking about the technical part, today we actually have the negative surprise trading strategy, not only because the sterling dollar currency pair, which we are going to discuss today, has a quite bearish sentiment, but also because some financial institutions project that the inflation in the UK will not be able to bounce back to the 0.1 percentage points as it is on average expected. For instance, Commerzbank, Credit Suisse, and the Royal Bank of Scotland, all of them expect the inflation to increase, but just to zero in November from minus 0.1% we have seen in October on the annual basis. And it's all because of the oil price declines, which resumed just a couple of weeks ago and has possibly influenced the CPI reading. So speaking about the trading strategy, as you can see, the pound-dollar currency pair has a bearish sentiment of almost 55% at the moment, and also the majority of the pending orders for this currency pair are set to sell the UK currency against the US dollar at the moment. Mentioning the sentiment among other market participants, you can see that actually they are quite divided on the cable. Some of them are bullish, some of them are bearish. So no distinct trend from their point of view. Speaking more about the trading strategy itself and the current trading levels of this currency pair, you can see that at the moment it is located at 1.5158 level, and as usually, of course, to project the possible market reaction, let's have a look at the previous reactions for the last 5 months respectively, and the average reaction used to be 31 pip, so quite actually a decent reaction for such type of data, which is actually quite important for the UK. But considering that the nearest support level for the pair is placed just at 1.5110 level, so it's 50 pips below the current spot price, we do not anticipate the sterling to decline as low as that level in case we have a real disappointment from the data. Therefore, the more general scenario, more moderate scenario projects a decline to the area of 151.35, which is some 25 pips below the current spot price. But of course, in case we see a disappointment, we can see a decline also further to the downside. We cannot also rule out a positive surprise in case, of course, the UK CPI, UK inflation grows as expected or even more. We will see probably the value of the sterling picking up against the dollar and possibly above the 151.80 area, which is at the moment which consists of the 4-hour R1 and R2 resistance lines. Since I have just 45 seconds to go until the data will be finally released and published in the chat section, I will shortly mention the technical indicators, which are, by the way, supporting the bearish case, and they are pointing to the downside on the 10-minute time frame, also the 4-hour, weekly, and the monthly time frames, even though they are giving a neutral or a mixed signal on the 30-minute time frame at the moment. But of course, the market reaction will most likely depend on the numbers. So let's just wait for them. We have some 10 seconds to go, and we'll probably possibly see the first market initial market reaction. Okay, let's just wait for the numbers. I think we just have a couple of seconds to go. The pair is not actually developing that much for the moment. So considering the numbers, actually the inflation rose as expected to 0.1% in November, up from minus 0.1% in October. At the same time, we have a kind of disappointment from the PPI number, so the producer price index, which was released along with the CPI, which disappointed and declined by 1.6% in November, month on month, which is an indeed disappointment because it was expected to decline just by 1% after a 0.2% increase in October. Speaking about the market reaction, as you can see, the pair is not moving that much at the moment because possibly traders are already pricing in the future the future inflation from the UK, which probably is going to disappoint us again because the oil price decline resumed, and this negative impact will be possibly translated into the next releases of the UK inflation. So they are not that optimistic at the moment, and therefore we don't see any significant increase in the value of the sterling, the same as we don't see any decline in the value of this currency. And of course, we are now awaiting the data from the US, which we are going to discuss today as well. The US CPI data a bit later today at 1:30 p.m. GMT, and of course, everyone also is watching the Fed interest rate decision, which is due tomorrow. So possibly it is one more reason why there is no that sharp market reaction. Possibly everyone is focusing on the FOMC at the moment. Okay, I guess that for now that will be all from my side on the technical part today. And for now, as I have said, we will discuss the US CPI data as well in some couple of hours from now. So see you soon, and back to you, Polina.
Yes, thank you, Max. Wonderful analysis. And as you can see, the yearly CPI turned out to be exactly as it was expected, and we can still see the reaction on Max's screen. We would like to thank you for participating, and definitely stay tuned because right now Forex Speaker will continue his webinar, and later during the day at 13:30 GMT, don't forget that we're going to cover the US data, as Max already mentioned. Meanwhile, as I already said, stay tuned, and we will see you guys very soon. Bye.
Bye. Thank you, Max93. It was a great analysis, actually. So we will continue with our sharing screen. So it was here in time frame 5 minutes, according to Shimkin Ohio. We are waiting